Hi everyone, welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. My name is Atira and I will be the moderator for today's session. Our topic tonight is Diversify your portfolio with ETF, aligning global strategy with local access. Diversification today is not just about owning more stocks, it's about linking your portfolio to the big forces driving the world economy. Changes in interest rate, inflation, and growth in different regions don't just move markets, they create new opportunities. So today, we are honored to have Mr. George Poe, co-founder of EECameron, who will be sharing his insight on how ETF can help investors diversify effectively and align their portfolios with global trends while accessing them locally. Before we proceed, allow me to make Before we proceed, allow me to make a short disclaimer. Please be reminded that everything that is shared in this session is mainly for educational purpose and by no way we are providing you advice to buy or sell any securities. You are 100% liable if you make any investment decision. Now, let me introduce our guest speaker today, Mr. George Poe. Mr. George Poe is a financial practitioner and a financial coach who has more than 10 years of investment experience and 4 years of working experience in wealth management and financial planning industry. He is the certified member of Financial Planning Association of Malaysia, FPAM, with Certified Financial Planner CFP qualification. Mr. George is the holder of Capital Market Service Representative License (CMSRL) and a Financial Advisor Representative (FAR) license approved by Securities Commission Malaysia and Bank Negara Malaysia. Mr. George also involved himself in various types of investment to navigate Malaysian towards better financial life. Mr. George holds a Bachelor in Finance First Class from Coventry University, UK, and has been actively involved in organizing finance-related conference and workshop. With that being said, let us warmly welcome Mr. George to the floor. Good day, Mr. George. How are you today? I
Thank
hope
you,
you are doing
Atira.
well. You're welcome.
Thank you. Right.
So I will pass the slide to you, okay?
Sure.
Thank you.
Okay. Let me share my screens. All right. Can everybody see, my slides?
Yes.
All right, good. Okay. Good evening, everyone. Thank you, Atira, and thank you for the invitations to share about our today's topic. Right. So our today's topic is about how to diversify your portfolio with ETF. So I believe some of you okay. Let me before I start, right. How many of you know what is ETF, or you know the full name of ETF? You can just type in the comment sections so that I know that you are aware and you are well versed with ETF, whether in Malaysia or in overseas in market, right? So if you know about the full name of ETF, please write it down for me. All right. So today I'm going to share with you how are we going to align the global strategy with the local access of the ETF in Bursa Malaysia. Now, what are you going to learn from me today is that I will share with you how to understand how ETF offers exposure to global and also thematic investment strategies, which might complement your investment in stock market in Malaysia, especially, right? And secondly, how to evaluate the ETF products that are available on Bursa Malaysia across different sectors and also regions. And last but not least, to design a diversified portfolio using ETF that you can have access in Malaysia via Bursa Malaysia to complement your direct equities and also reduce your concentration risk. Right. So without further ado, let me start with our today's topic. First and first, why ETF matters in today's global investment strategy. Now, may I ask another question to all our audience, our participants here today? How many of you actually invest in Malaysia market only, right? How many of you only invest in Malaysia market? You put in 111, right? And for those who invest not only in Malaysia, but also you invest in overseas, for say US, Singapore, Hong Kong, whatsoever, you put in 222 for me. I want to see how many of you only invest in Malaysia and how many of you invest diversified towards different countries, right? Okay, thank you everyone for your participation. I can see we have a mix of it. Okay, some of you invest only in Malaysia. Some of you actually do diversify your investment to overseas as well, right? Now, let me share with you a statistic, right? Let me share with you and why are we going, why am I doing this, right? Your portfolio is not global enough, right? Let me share with you one thing. Okay, this is a survey from Ringgit Plus Malaysia, a financial literacy survey in 2024. And as we can all see, the most invested products by Malaysian via the survey is actually ASMB funds, right? Which we have about 57%. And the second largest, we have unit trust. The third, we have precious metals. Now, why am I showing you here? Because if you look at one of the category here, it mentioned about stocks or equities, international, we get only 11% of it. That means a lot of Malaysian investors, we are not involved in investing overseas. That means all your portfolio, your investment, they are exposed or concentrated in Malaysia itself only. And that's the problem. Okay, let me share with you one of the another data which we get it from Securities Commission, right? And this data show us the Malaysian capital market size. Okay, in 2024, our total capital market size is about 4.2 trillion. And Bursa Malaysia market capitalization itself is about 2.1 trillion. Okay, now, if you only invest in Malaysian market, you are only exposed to this 2.1 trillion ringgit Malaysia's market. Now, I'm not trying to scare you. And why do I say we need to invest globally? Now, let me show you one thing. Okay, remember this number from Malaysia's market, where 4.2 trillion, the total capital market size, and also 2.1 trillion for the Bursa Malaysia market capitalization size. Because in global stock market itself, we have about 127 trillion global stock market capitalizations. And if you do the calculation, if you do the calculation, Malaysian market, we are only 0.3%. Okay, it's not even 1%, guys. It's only 0.3% of the world's market capitalization. That means if our portfolio, if we do not invest globally, we are actually ignoring 99.7% of the global opportunities. Now, I'm not trying to say that you need to fully diversify to cover as much as possible of the gold, the overseas market. It doesn't mean that, but we need to also put our, eyes or our investment strategy to try to see if there is any global opportunities arise outside of Malaysia that we can tap on. This is something very important, right? So, and why am I saying that we need to have a global view? Because let's don't forget one thing. Malaysia, we are an emerging markets, right? We are in emerging countries. We are not the developed. We are on the way. We are on the way to become a developed countries. Now, when we are an emerging countries, whatever happened, in the developed countries, the giant, for example, US, China, European Union, right? Whatever happened from that countries itself will affect us as well. Now, when you think about, I only invest in Malaysia, I'm not exposed to the global risk, you're wrong. Because what happened in the US will affect the Malaysian market as well. So you can't really escape the global trends. That is what I mean, right? And let me show you one of the why I say we can't escape from the global trends. Let me show you. There are three reasons here. First thing, ringgit depreciations. Do you think ringgit will depreciate, without any without any issues or without any event happening around the world that caused the ringgit to depreciate? Do you think that will happen? No, right? Because ringgit will depreciate because there must be something happening overseas that cause the ringgit depreciation or ringgit appreciation. Like this year, we are seeing ringgit is appreciating, right? So let me show you one example. In 2022, ringgit depreciated against the US dollar. And do you think when ringgit Malaysia depreciated against US dollar, would it affect your returns even if you didn't invest in United States? Do you think it will affect your returns as well? Yes or no? Yes or no? Right. The answer will be yes. Why? Because when ringgit depreciated, okay, imports get more expensive and inflation spiked in Malaysia. And that will cause you to suffer. And that might cause your stock market to not performing, right? So this is one of the example I can share with you, right? That we can't really escape global trends. Now think about another global trends happening around the world. If I were to ask you, give me one global trend that you think is happening right now, what will you tell me? Any answer? If I were to ask you, tell me one of the biggest trend happening globally right now. What would you tell me? Anybody? Okay. Some may tell me, George, it's about AI. Yes, I got the answer. Some may tell me it's about semiconductor. It's about technology. Now, these are all the global trends. Now, when we talk about AI, we talk about semiconductors. What are the names that will pop up in your mind? NVIDIA, Tesla, Microsoft, Google, right? And is all these companies listed in Malaysia? Do you think they are? They are not, right? So see how how I portray to you that we can't really escape from the global trends is that when the global trends happening around the world, it might be a chance for us to actually tap on, the trend, tap on the momentum to invest globally, right? Think about it. Okay, and these are the global signals. So we even that we only invest in Malaysia, in Bursa Malaysia, you can also tap on the global trends and how that is why we are having this webinar today. I'm going to share with you, right? And thirdly, even that we are, we are not exposed to global stock market, Malaysian market is still vulnerable to that. All right. So these are the three reasons that why we can't escape from the global trends. And today's topic, our focus is on ETF, exchange traded funds, right? And why ETF are a practical global tool that I would like to introduce to you. You can actually start to learn about it and then to see if it suits your investment strategy or methodology to fit into your investment portfolio. All right. There are a few things. Now, first thing first, ETF can be traded like stocks in Bursa Malaysia. How many of you know that? Put in yes for me. How many of you know that you can actually trade ETF like the stock in Bursa Malaysia? Okay, if you know the answer, if you know that already, put in yes for me. Yeah, I can see a few of you, right? Now, and now that's not the only fantastic thing about ETF. It gives you the flexibility to trade like a stock, but it also gives you the wonderful side of unit trust fund where you can invest it like a fund. Because when we mention about stock, it's always about a company, a single company shares that you can trade is what we call stocks. But when you want to invest in, for example, unit trust is often not traded like ETF. You need to buy and sell, and it has some lengthy processing day. For example, T+5, T+6, some even go up to T+9. Now, I'm not saying that unit trust is not good, but if you are someone who are looking to diversify your portfolio into something flexible with higher liquidity compared to mutual funds, ETF is someone that can do that for you because it can be traded like stocks and invest like a fund. Okay, now this is the first benefit of ETF, right? And secondly, It is listed on Bursa, and that means you can invest it in Ringgit Malaysia. Now, you don't need to worry about the foreign exchange rate. They need to convert your Ringgit Malaysia into US dollar for you to invest into the US market, into the China market, into the European Union, the Europe market, right? You don't need to worry about foreign exchange rate because you can invest in Ringgit Malaysia in or on the ETF listed on Bursa Malaysia. Okay, now, thirdly, ETF also give you some exposure towards sectorial, regional, and also thematic exposure. So by all that means, you can choose, based on your research or your market knowledge. For example, you think that US technology market is really good, and in Bursa Malaysia, there is no US stock for us to pick, right? But there is, an ETF that has exposure in the US market. You can choose to invest into the ETF for you to have the same US market exposure in Malaysia, right? And last but not least, it gives you a lower entry point. We always know, right? How much how much is the minimum order that you can play? You can put in a Bursa Malaysia trades. You can buy as low as 100 shares. Am I right? So it gives you a lower entry point to invest in Malaysia and also in ETF. So basically, ETF, to summarize it, it solves us the biggest barrier for our Malaysian investor. That means you don't need to open a US brokerage account. You don't need to worry about the foreign exchange fees, and you need to worry about how to manage your foreign taxes. Yeah, don't forget there are different taxes resident in different countries. So if you invest one by one, you need to manage your foreign taxes. But invest via ETF in Malaysia, you don't need to worry about it. Okay, now let me move on further to some technical item here, right? So how do we use ETF to build a smarter or a global portfolio, right? And this is what we call a satellite portfolio. Okay, so I like to think of my portfolio as a building. Okay, so a core portfolio is something stable, okay, local, or something that you can understand deeply. For example, stock market. Okay, so in your own investment portfolio, right? You can have your own design of your portfolio. It doesn't matter, but you must always have one that is core portfolio where you understand the underlying assets deeply. You know very well on the investment itself. So, for example, stock market. For me, I like to invest into financial institution in Malaysia and also some of the technology companies in Malaysia. So that will be my core portfolio. Okay, but in a satellite core portfolio structure itself, there is a satellite where this component actually can give us some access to global growth stories. I give you an example of myself. I invest my core portfolio only in Malaysia. So, most of my portfolio is actually Bursa Malaysia stocks. Okay, the stocks companies that are listed on Bursa Malaysia. But you can always have a satellite where this component you can invest into some global stocks, for example, global ETF, global unit trust, and whatnot, right? To give you more access to different growth stories. And if you wanted to have a more fancy portfolio, you can always have a hedging kind of a component in your portfolio. Okay, so for example, if I'm bullish on AI, for example, so I can add a global tech ETF into my satellite portfolio. And if I'm worried about inflation on Ringgit Malaysia, then I can invest into some gold ETF. So these are different kind of ETF portfolio that we can introduce into our investment. Okay, and ETF is always the easiest first step to global diversification. If you don't really know how to study, the stocks market, the stock in US, in China, in Europe, you don't know how to study it, don't worry, because there is ETF for us to have the very easy first step to diversify your portfolio globally. Okay, now, and Malaysia's portfolio, we are overly local, as I mentioned just now. And secondly, global risk required global strategy. As I mentioned, even if you only invest locally in Malaysia, we still expose ourselves to the global risk. Now, if we are, by all means, we are exposed to the global risk. Why not? We take in some global strategy to diversify our risk and to amplify our investment returns, right? And ETF also offers us low cost, flexible, and diversified assets. Now, when we mention about low cost, it always tied to your broker's platform, okay? Because invest into ETF, it's just like a stock. So if your platform charge you 0.8% brokerage fee, that's the cost. If you can get a lower platform that charge you only 0.08% brokerage fee, that's your cost, right? So always remember, the cost actually comes along with the platform that you use, but not towards the tools. But overall, I think Malaysians, our stock platforms, stock trading platforms, they are quite lower in cost compared to mutual funds. All right, right. And local account, global impact. Now, this is a slogan that I like a lot. Okay, and to introduce ETF to you is not to tell you how we can actually trade more stocks on Bursa Malaysia, but rather I would like to introduce to you this item called how are we going to build a smarter investment portfolio for ourselves. And ETF allow us to make global allocation decision without having to study a lot more on the US stocks and whatnot, right? So you can always see ETF not just as an investment tools, but as a strategy enabler to enable your investment portfolio towards the global assets, right? So this is my very first chapter I wanted to cover and to share with you why ETF and why we should diversify our portfolio into global assets or global market, right? Now, before I really go into how ETF work and how to choose the right ETF and whatnot, right? Let me share with you a quick ETF 101. Okay, so for you to understand, what is an ETF? I have some people tell me, you know the answer, right? What is an ETF? And then some didn't answer. So I assume half of you know what is ETF and half of you don't know, right? So let me be the teacher for you for these sessions, right? ETF stands for exchange traded funds. It is a funds that trades an index or a theme. Okay, and it can be traded like a stock, but it holds a basket of assets. Like I mentioned just now, it trades like a stock, but it invests like a fund. And because of this nature, it has a built-in diversification, okay, within ETF itself, because they hold a basket of investment assets inside them. And they are transparent and liquid because it can be traded on Bursa Malaysia, right? So you think of this way, you think of ETF as a bundle of investment that pack into one tradable stock. Okay, just imagine this way. So you get exposure to multiple companies or sectors with only buy this one stock called ETF. And unlike other unit trust funds, ETF, they are actually transparent and because they can trade in real time like a stock. So this makes us more ideal for active investor who want flexibility and also good for passive investor who wanted lower cost, to invest. So it can be good for both active investor and also passive investor. Now, and I share with you this illustration. Actually, I got it from BlackRock that share about what is an ETF. It can be like a stock and also in between a stock and also a managed fund. Okay, and when I talk about ETF, some may misunderstand that, oh, George, ETF is something new. Okay, I think no, ETF is not new. Okay, ETF is something that many Malaysian investors are not aware, but actually ETF is not new. And in fact, ETF is actually favored by a lot of global investors. Okay, if you have the chance, okay, you go and search for US S&P 500 ETF. That are listed on US market, right? You can check on the market capitalization itself on the different type of these S&P 500 ETF, and you will see they have a huge investor base, or AUM invested into the ETF itself. So it is a very favorite investment tools by global investor. Why? Okay, the answer is very simple. They are low cost because they are passively managed. They have a very good liquidity because you can buy and sell during trading hours. You also get the best part of diversification because a single ETF equal to a basket of stocks, and you get transparency. Now, because of these four reasons, people like to invest into ETF. And it's actually the structure of ETF strips away many unnecessary layers and also fees. So you don't need to, for example, okay, let's give an example of Malaysia KLCI. Okay, in KLCI, we have 30 companies, right? We have 30 blue chips company. Now, if you only have a 10,000 ringgit Malaysia to start with your investment, and you say, oh, I want to diversify my investment into the entire KLCI, 30 companies. Do you think with your 10,000 ringgit Malaysia, you can diversify into these 30 companies? Do you think you can do it? Okay, let me see if there's any answer from the chat box, right? Do you think you can do it? I don't think so, right? I don't think so. But if, let's say you have this 10,000 and you think, okay, I can invest into, KLCI ETF. That means you only buy one ETF, but you get the exposure of these 30 companies. This is what I mean. All right. So it is actually perfect for both new and also seasoned investor who wanted to have more control on their investment. Okay. And because today we are talking about ETF, for sure I have to share with you what are the ETF types that are listed on Bursa Malaysia. So for you to have an idea, if let's say you wanted to choose ETF that are listed on Bursa Malaysia, you get to know what are the categories itself. Okay, now there are five major categories. I would put it this way. There are five major categories that represent the entire portfolio buildings of ETF in Malaysia. Okay, now let me share with you. Number one, the first category of it is index-based ETF. Okay, what do we mean by index-based? That means these ETF, they actually invest according to the specific index. So for example, we have the FTSE Bursa Malaysia KLCI ETF. Now this ETF, they only invest into the top 30 stocks that are that forms the KLCI index. Now this is what we call index-based ETF. Okay, and second category we have is the sectoral or also thematic ETF. That means this ETF, right, they have different exposure towards certain themes or certain sectors. For example, Trade Plus Sharia Gold Trackers. Now, by reading the names, it explains itself. This is a thematic ETF that track or invest in gold. Now, if you're an investor and you do the research and all that, you think, oh, gold market is going to it's going to boom. Okay, it's going to rocket high, right? Then you say, hey, where can I invest into gold? Okay, you found this thing, Trade Plus Sharia Gold Tracker, and it's an ETF. So these are some thematic play that we can also input into our portfolio, either you input them as a satellite portfolio or a hedging portfolio. All right, these are the second category. Now, the third category is what we call a geographical ETF. Now, this mainly means that the ETF actually invests based on some geographical region. For example, China, US, and whatnot, right? So one of the example I'm going to share with you here is also Trade Plus S&P New China Tracker. Now, this ETF itself gives you exposure into the China growth market, but it is a ringgit-based ETF. So you don't need to exchange your ringgit Malaysia to US dollar, Hong Kong dollar, or Chinese renminbi, but you can have access, with your ringgit Malaysia. Just invest into this ETF, right? You get the exposure of China growth market, right? And the fourth category is what we call a leverage ETF. Okay, leverage means you get either 2 times, 5 times leverage on the underlying stuff. So one of the example here is Kenanga KLCI daily 2 times leverage ETF. That means whatever happened in the daily performance of KLCI, your ETF will always get 2 times higher or 2 times lower. So for example, today KLCI increased by 1%. Then this ETF most likely will increase by 2% because they are a 2-time leverage ETF. Okay, and vice versa, if let's say KLCI dropped by 1% today, your ETF, a daily 2 times leverage ETF, might also drop 2%, because of the leveraging effect of this ETF. And last but not least, the last category is what we call the fixed income ETF. Okay, and one of the examples here in Malaysia is what we call the FPF Malaysia Bond Index ETF, where they invest into low risk income via the Malaysian government bonds. Now, these are the exposure, or what we call the categories of ETF that are available in Malaysia. And I'm going to share with you the whole list of the ETF listed on Bursa Malaysia. But don't worry, you can always get this list of ETF available from Bursa Malaysia's website. All right, and how many pages we have? Total, we have 4 pages. Okay, so we have a conventional ETF, we have the Shariah-compliant ETF, we have the leverage ETF. Okay, so these are the example of ETF available in Bursa Malaysia, right? And after we have learned the introductions to ETF, why we need to invest in ETF, now I'm going to share with you when and why to diversify globally. Okay, because it's not always you're not encouraged also to always diversify your portfolio globally to other countries. When if let's say Malaysian market is good enough, right? But when and why do we need to diversify, right? Here I need to introduce you to some economics indicators, or we move on to some macro view on portfolio diversification and why macro matters in our portfolio diversification. Because give you an example, US interest rate changes will impact the tech stocks, whether up or down, and also the capital flows towards Malaysia or back to the US market. And China's slowdown might also affect our ASEAN market. Ringgit movement will alter the returns. And these are all the hidden portfolio risks: inflation, geopoliticals, and your portfolio move with the world, whether you like it or not. Okay, so why macro views actually matters in our portfolio diversification. Now, so with all these idea and all these pointers that I share with you, let me also move on to share one of the approach that I personally use in my investment journey. For those who have been into my webinar multiple times, various occasions in Bursa webinars, you will still remember my investment approach. It has been there, and this approach has been with me for the past 6-7 years, unchanged. So my investment journey is very simple. My methodology is very simple. We start with the economy first. Okay, always study the macro economy, because we need to know where will be the next market that is going to give you green returns, positive returns in the next 1 to 3 years. So I always start with macro view. Okay, once we study the economy, then we narrow it down to sectors or themes. So for example, if you study all that and you think, okay, AI and also technology will be the next sector or next theme, right? So from there, you get to know how you narrow down your selections, you narrow down your watch list and the stock list that you have, then easier for you to pick the stock. Okay, but in ETF, what changed? It doesn't change much. Okay, from my own methodology, macro view, theme or sector, then it comes to stocks. And because ETF just like a stock, you can trade it like a stock. So at this investment flow, after you study the macro view, after you get the sectors focus, then you get to choose the ETF that fit into your investment selections. Okay, and by doing this, right, it actually avoids noises in the market and also help us to position earlier. Okay, because you get to know and you can forecast what is the macroeconomic views moving on, right? Now, let me give you a case study. This is where our Bank Negara Malaysia actually lowers the overnight policy rate this year. Okay, and also there is a news early this year that the US recession risk has increases. Okay, so when this type of news, this is what we call the macro. Okay, with all this news, what should you do? when you study this, you know that, oh, isn't it the market is going to move? Because Malaysia lower our OPR rates. Why? Why Malaysian we lower our OPR? And when there is a increased, risk of US going into recessions, what does that mean for us, right? If you understand the macro, then you might slightly from the investment flow, you will go down. Okay, now I know the macro view. The market sentiment is not good. The market has a lot of uncertainties. Then you will move on to the second layer, which is the sectors or the themes. And if you are smart enough, you know how to understand the economics and all that. You'll see, oh, when market uncertainty is higher, what are the sectors they will go up? There might be some defensive sectors, for example, gold, for example, bonds, right? So if you're smart enough, you can choose to invest into gold bonds market, right? Now, this is just a case study for you all, but I'm not saying that right now is a good market, it's a good timing for you to go in. Need to always study the real-time economic performance, right? And there are 6 key macroeconomics indicators to watch. In today's webinar, I'm not going to go down one by one because I have shared this in my previous webinar together with Bursa Malaysia. So if you'd like to know more about these key economic indicators, you can always go back to YouTube. Okay, look for this topic called "Complement Your Investment Strategy with Economic Understandings," which I have done it last year, 2024, August 7th. Always look for the live replay and you get to learn more from there, right? Because today's topic, I'm going to share with you more on the ETF, but not towards the economics understanding. All right. Okay. Next. So how macroeconomics can shift our how macroeconomic shift can actually influence our portfolio constructions. Okay. Now, what are the macroeconomic changes that we often see? Like today, this morning, what news that we got? Okay, what news that we got from the US market, fresh from the oven, the interest rate cut by the Fed, right? Now, this is one of the example of the macroeconomic shift. Okay, so and this shift will often lead us to rebalance our portfolio. Okay, and we always need to rebalance our portfolio if the macroeconomic landscape change a lot. And when we talk about rebalance our portfolio, we need to always align it back to our investment goal, our methodology, our risk tolerance, and all and whatnot, right? So let me share you one example. Okay, if you are only focused in Malaysian market, you are core equity exposure. Okay, then with macroeconomic shift, you know how to study macroeconomic. You can now have a balanced equity exposure in your own investment portfolio, where you can have local and also a mix of global exposure. Okay. Now, if you are with a minimal defensive assets, that means your investment, you are 100% all in into growth stocks and a high growth stocks. Okay. Now, with the macroeconomic understanding, and you know how to study the market, ETF exists in Malaysia. Now you can also increase some exposure to defensive assets. Just invest into Bursa Malaysia. You get to have exposure to defensive assets as well. Okay. Now, if right now your investment portfolio doesn't have some thematics or locations, right? By understanding this, you get to add some exposure to thematic opportunities. Like, for example, gold ETF, for example, new China Traders ETF, where you get to invest into China's growing story if China market is growing, right? And if you are cash heavy, now you don't like, I don't like to invest, so much of my money into the stock market. So you always, save about 50%, 60% of your money in cash. Now you can get more active allocation for ETF because, for example, you can save some of your cash, into some bonds, fixed income ETF, where you get fixed income, from the investment itself, right? So this is why, and how by, integrating ETF into our investment portfolio, we get to improve, and enhance our investment, into a more balanced exposure, and also we get to have more, opportunity to invest into some thematic market and also some defensive assets, and you get to have more active allocations, okay, for your investment portfolio. All right. Now, the ETF selection strategy. Okay. Now I would like to share with you how to select ETF. Okay. Now, too many investors, they trade ETF just like a stock pick, you know. But ETF, they are not a stock. They are fund. They are what we call strategy. Okay. So for example, if you are bullish on China market, okay, you're only bullish on China, or maybe there is some certain industry in China that you're bullish with. It might be some consumer growth, EVs, or technologies companies, industries, right? So if you're bullish on certain industry, just go and pick one of the ETF that fits with your investment narrative. That's it. Easy, right? Yeah, that sounds very easy, lah. Huh? Okay, so what I'm going to share with you, don't buy an ETF just because it's popular. Now, this is the red flag for all the investors here today. Right? Don't buy an ETF just because it's popular. Don't buy because I shared it to you today. So you think, oh, Josh shared to me. I think this is a very good ETF. I invest. Don't do that. Okay, because you need to always start with your investment objective first. Always know why are you investing. Okay, why are you investing? What you try to achieve with this investment portfolio. And after that, ask yourself, what exposure do I want with this ETF? Do I want it to be a geographical focus? Do I want it to be a sectoral? Or do I want it to be a thematic, kind of an ETF? Or do I want it to have some leverage, element in the ETF? You need to always ask yourself, what exposure do I want? Okay, and then you match it with my investment flow from the macro view towards the sector and then towards choosing the right ETF instrument. Okay, and always remember, understand the ETF structure, not just the performance itself. Because as like I say, ETF is very transparent. You get to know what they invest in. Okay, and it's very highly liquid. Okay, so when it's highly liquid, performance is one thing important, but the entire ETF structure is also very important for you, so that you get to know what ETF to choose from and then what you are investing into. Right, that's very important. Okay, now I have a simple, selection model for all of you here. But this is not, very comprehensive one. Just a simple selection model to share with you, so that you know where to kickstart your investment, your ETF investment journey. Okay, so let me give you 3 steps here. Okay, so first thing, your goal. So you need to ask yourself, what is your investment goal? Do you look for growth? Do you look for fixed income? Or are you investing into ETF because you want to hedge for something? Or you are looking for stability? Okay, now this is the first thing or the first step that you need to always ask. Okay, and some other ETF examples that available, or category or type of ETF example, if your answer or your goals fit to one another. For example, if you're looking for growth, your investment in ETF, you're looking for growth, then there is global ETF, there is China growth ETF, where you can actually have your exposure into the growth. Okay, so if let's say you're looking for income, you're looking for fixed income, then there is bond ETF available for you. Okay, and next, if you think about hedging your investment portfolio against some uncertainties, then there is also gold ETF. These are all the examples that are available. Okay, now second step, after you get to know your goals, look for the risk level. Okay, are you a conservative investor? Are you a moderate, or are you an aggressive investor? Because different type of investor, the ETF that are suitable for you is also different. Okay, for example, the aggressive one, you might want to go for leverage ETF because you're very aggressive. So these are something for us to ponder about, and then to always ask yourself the right question, to fit and choose the right ETF for yourself. Okay, and last but not least is the time horizon. Will you want to invest it into a long term or want to invest for a short term? Because short term, for example, some tactical sectors, some thematics ETF, these are all what we call a short investment horizon. Because when the themes is no longer hot, then you need to jump to another hot themes, in time by time. But if let's say you're going for a long-term investment journey, then you say, okay, I just invest into index, So these are what we call the selection model, okay, that I can share with you, which is quite easy for you to actually do your selections and also to fit it into your own investment portfolio as well, right? And um, you might have a question for me, Joshua. How to choose the right ETF? You told us about the goal, the time horizon, the risk tolerance level, and investment objective and all that. But how to choose the right ETF? Okay, here are some factors. Okay, 5 key factors. First thing, if let's say it track index, okay, always understand what index that is track, and is this exposure that you wanted to have. Okay, this is the first thing. Now, secondly, holding transparency. You need to always know what you actually own. Not only this ETF itself, but what stocks or what instrument that have been invested in by this ETF itself. This is also very important. Thirdly is expense ratio. Now, this is something available in ETF itself. It's what we call expense ratio. Is the you can just imagine it as the cost of investing into ETF. So the lower the expense ratio, the better the long-term performance, because the margin error is lower now against your ETF towards the index, the underlying index. Okay. Number 4 is what we call liquidity. Okay, liquidity is also very important because it will give us a leeway, or it gives us a more easy way to buy or sell with a better spread for our ETF. Okay. And last but not least is a tracking error. This is what I mentioned just now. If your expense ratio is lower, your tracking error should be closer as well, because your ETF will follow its index very closely. Okay, very closely. Okay, so you don't want to actually invest or choose an ETF that is with higher fees, bad liquidity, or also unclear structure, right? So this is very important. These are the 5 key factors that we need to always compare when we're choosing an ETF, right? And think of ETF like a Lego blocks. Okay, so you build different portfolio structures, depends on your goals, depends on the investment objective, and also depends on your investment portfolio structure itself. Okay, so last part of my today's sharing, I just feel that the time passed by very fast. Okay, so I want you to have this kind of a strategist mindset when you invest into stock market, not only into ETF, but invest overall in your investment portfolio. When we also wanted to integrate ETF into our investment portfolio, is very important. Always think like a strategist, because you are not only invest into a single company, you invest into a basket of investment assets, right? So why most investors they stay passive even when market change? Because most of the investor, we always see the signals, but we don't act. Some they lack confidence, or they feel not interested with the with the market. So ETF is actually here to to a solutions to act without a complexity for most of the investors. For those who lack confidence, who have no interested in to overseas market, but ETF is actually here to break the barrier for you to actually have more exposure, towards the market. Now, I'm not going to share this scenario because of the time constraints. Maybe I share one. Okay, for example, if market is uncertain, there is a lot of volatility, just like back in April, what happened in the market? Market uncertainty is high. We have a higher volatility in the market, and as an investor, you're always concerned. I'm worried about the short-term volatility. Now, if let's say you are a strategist, how are we going to respond? Using ETF. Now, if you are a strategist, you might already think that, okay, if the market is uncertain, if the market is volatile, I can invest into gold ETF as a hedging to my investment portfolio. If I wanted to add some stability, I can invest into bond ETF. And if you wanted to reduce your higher beta exposure towards the broad market, you can invest into index ETF. Okay, so ETF can be your shock absorber. What we call the absorber, not just like your car, during uncertain times. Okay, so you are still investing, you still invest in the market, but you just get smarter because you have ETF to position yourself and position your investment portfolio. Okay, this is one of the scenarios that I wanted to share with you. I will just skip the second and I will just skip the third. All right. So in summary, to conclude our today's sharing, times pass very fast. Okay, always respond strategically. Okay, in investment, don't get too emotional. That's very important. ETF will actually give you the answer to most of your investors' problems. Like you lack of confidence, you don't know how to start with US stock market and whatnot, right? ETF actually give you a very easy and simple answer to most of your problems. And secondly, you don't need predictions in investment. Okay, but we all need clarity. So how do we get clarity in our investment decision? Study more. Okay, you need to always study, know how to study the market, what happened to the market, past, present, and future. Okay, always study the macroeconomics and scenarios that help you apply, adjust, and also stay invested. The scenarios that I mentioned just now. Always think like a strategist. Okay, because at the end of the day, every investor, we face the same challenges. We always have fear. We always feel greed, when the market is good. And we always feel FOMO. When we see other people, wow, why they can earn so much of money during this bad market? You think, wow, I need to do like them lah. I need to invest gao, right? Don't get FOMO, okay? And with introducing ETF into your investment portfolio, I hope that this can give you a more strategic view in structure your investment portfolio and always, a response to the market macroeconomic performance or shift, and then always move with the market trend. And I believe with that, you can, use ETF as a tool for you to build a better investment portfolio. Right. So with that, thank you everyone for spending your time here to learn me sharing with you what is ETF and what are the ETF available in Bursa Malaysia. And I'm going to open some Q&A for those of you who have any question with my sharing today. I hope you enjoy the sessions. Yep. Let me just pass back the floor to Atira.
Hi, thank you, Mr. George, for your wonderful sharing with us. We will now proceed to the Q&A session. If you have any question, please type them in the Q&A box. Our speaker will address them accordingly. Okay. So for the first question is, does ETF give out dividend in Bursa?
Well, this is a very good question. I don't think ETF give up dividends. Correct me if I'm wrong. Because most of the ETF they are actually index based, like I mentioned just now, or some of them they actually thematic play. They are commodity based or they are geographically based ETF. So I don't think they do. But always don't always only listen to me. You can always go to study the ETF itself. If for example the fixed income ETF, the bond, what is the name again? The FBF, I think it's a FBF a bond ETF. Always study if that our yes if that. So I think some of the ETF pay dividends, some of them don't. So you always need to study because some they have different type of investment strategy. Okay, so you need to always study that ETF itself. Okay, right.
Okay, for the next question, if we invest in a global technology ETF, do you automatically achieve diversification?
Okay, sorry again.
If we invest in a global technology ETF, do you automatically achieve the diversification?
Okay, the simple answer is yes. if you invest in, for example, global technology ETF, you will get diversification instantly because you have diversified your investment portfolio from Malaysia towards the global exposure into the tech companies, the tech industry. So you instantly get the diversification. Now, this is the simple answer. The more in-depth answer for that is this the diversification that you are looking for? Now, these two are the two different answer for you because you cannot simply invest purely because you wanted to do diversification, merely because you wanted to diversify your investment out of Malaysia, right? Because we don't structure our investment portfolio that way. Okay. And like I mentioned just now, we go with macroeconomic view and then we go into the sector or the themes that we wanted to invest into. Because by studying the macroeconomic views, we know what are the booming or the next trend in the market. Then we only invest into that industry. So if you diversify your investment because of this structure or because of this view, then yes, you will achieve your diversification and your portfolio will garner more what we say investment returns, and don't simply diversify purely because you want to diversify. All right.
Okay. Next question is what is the expected returns of Bursa listed ETF?
There is no expected returns for all the investment. I would say it really depends because okay, let me give you an example. You can't expect the bond or the fixed income ETF to give you 10-20% returns in a year, right? So
Yes.
the expected returns is still depends on the underlying assets that you invest into it. So if let's say you invest into growth ETF, for example, like the new China Traders ETF. So if you are looking into the growth stocks market, then you should expect higher returns. Okay. But as I always mention to publicly to all my students and also to all my clients and all that, right? To my friends, I always say expected returns is something you expect, but this is not the real return that you will get. Okay, this is not the real returns that you will get. So always need to study the market very well because you can expect. I can always expect my investment or the investment instrument that I invest to give me higher return. But will the market give me higher return? It really depends on the market performance. Okay, so I don't really have the expected return for you for the ETF listed in Malaysia.
Okay, the next one is will the price of ETF for foreign stock exchange market be adjusted according to the foreign exchange rate?
Okay, will the price of ETF for foreign stock exchange market be adjusted? I believe okay, I believe because we are, for example, we are invest into the index and it is all adjusted. Okay, but because we are invest in Ringgit Malaysia, okay, so the price basically you will see the price will get to you get okay, how I structure my answer this way. Okay, so as a stock, okay, when we invest into a stock, the price basically move based on demand and supply. Am I right? So
Yeah.
when ETF can be traded in Bursa Malaysia, just like a stock, okay, so the price movement will likely also depends on the demand and supply. But okay, don't get me wrong, because there is still the investment asset value, the NAV belongs to the ETF itself. Okay, so the foreign exchange will always get adjusted. Okay, but I think I need to study more. Okay, I need to study more whether the market is actually have a lot more exposure, for example, like the China one or some US market, then yes, there might be some adjusted price performance on that. Okay. And
Okay.
really depends on the underlying. It really depends on the underlying.
The next one is can you compare the Shariah Gold tracker to Bursa Gold Dinar?
Okay, I'm afraid I'm not in a good position to discuss to give you answer on this because I have no um deep research on the Bursa Gold Dinar, so I can't give you my answer on this. So I perhaps you need to find someone who really study about Bursa Gold Dinar and to give you
Okay.
the comparison. Sorry.
Okay, next question is trading volume in Malaysia ETF is relatively low compared to the US ETF. Does this mean ETF on Bursa are illiquid? Why or why not?
Okay. The answer is the reality is ETF is on Bursa Malaysia. We are still relatively illiquid at the moment. Um, One thing is because a lot of Malaysians investor we are not aware that there is ETF in Malaysia. This is the one thing. And secondly is because our, like I mentioned just now, our Malaysian capital market is very small in terms of our sizing. The market capitalization is only 2.1 trillion. So with that, compared, our ETF towards the stocks, we are relatively quite small as well. So illiquid is, I would say in reality, it is, if you compare to US market, for sure we are illiquid. But if we have more and more investors who actually start to be aware, and also start to invest in ETF, then we can see the liquidity growing in our ETF market. And I believe that's also the initiative from Bursa Malaysia to actually wanted to educate our investor more onto ETF market. Yeah.
Okay, next one is how do market makers help ensure Bursa ETF trade close to their fair value? And what happen if they are inactive?
Wow. I don't really have an answer to this. Okay. Um, Let me study more, okay, on the market makers in the Bursa ETF, and I get back to you on this.
Okay. The next one is what is the minimum amount? Uh, okay. What is the ETF expense ratio threshold that you consider as low?
Wow. Okay. I always compare expense ratio this way. If let's say you are investing, for example, you are looking to invest into KLCI index ETF, you compare between two or three similar ETF, and you take the lowest one, and then that can be considered as the lowest expense ratio threshold. Because why I cannot compare, I cannot give you outright one number, one threshold that mentioned, oh, this expense ratio is the best, can be considered as lower, because some ETF they are not passively managed. Okay, there are still some, ETF they are actively managed as well. So when you involve a lot more active management, so the expense ratio will get higher. Okay, so I cannot just give you one number to consider as a low, as a lower threshold for the expense ratio. But you can always compare Apple with Apple, then you get the lowest. Okay.
Okay, the next one is possible ETF price could lower than it and a NAV?
Well, I think that's why we need to have a market maker, right? Yeah, I think in terms of the market maker part of the question, I don't think I can give you the right answer, because I haven't studied that deep into the market maker part of ETF. So I'm so sorry about that. Let me study, and if I have more, yeah, I will just I will, share my parts, and in my social media and whatnot. Right.
Okay. With that being said, that is the end for our Q&A session. And we would like to sincerely thanks Mr. George for taking the time to answer all the questions and share his knowledge. Thank you, Mr. George.
Okay. Thank you very much.